Imagine a life where financial worries are a distant memory and you call the shots. Envision a world of true financial freedom where turning money into more feels like second nature. Ever pondered the extraordinary success story of Warren Buffett, the investing maestro, and his journey with dividend-paying stocks? Are you itching to unearth the secrets that empower you to create a reliable income stream and construct enduring wealth? Enter a world of limitless financial possibilities with Wealth Wizards. Join us as we explore the hidden world of investment dividends and learn how to maximize the return on your hard-earned money. Some people look forward to more relaxed days, while others prioritize home ownership or low housing costs in their golden years. It's hard to say no to the enticing sound of dividends being deposited into your account if you're an investor. Put your restrictions behind you because now is the time to make intelligent investments and use dividends to grow your money. But before we go any further, please click the like and subscribe buttons so you may continue to see our financial insights and strategies. For now, we'll help you secure your future and open the door to financial independence. Come on then, and we'll get started. Increasing the value of every retained dollar is central to the dividends debate. We admire companies like See's Candy because they embody this ideal. Warren Buffett, a legendary investor, is a staunch believer that dividends are essential to making money in the stock market. With 20,000 to 25,000 high-yield securities, Buffett says you can really capitalize on dividends. The compounding effect of interest on reinvested dividends can quickly add up to hundreds of thousands of dollars. The result are significant after 20 years, especially when combined with individual resources. $1 million invested wisely can provide annual dividend income of $50,000 to $70,000. Warren continues, the key for success in the stock market? Gains in excess of the market average and stable rising dividends, all at attractive prices. For today, we'll explain how dividends work and provide you with a complete guide to following Warren Buffett's path to financial freedom via dividends. Let's talk about how to plan for a $2,470 regular monthly income. But before that, let's define dividends. Investing in dividend-paying companies is a strategy for generating income. Profits allow businesses to grow and give back to their investors. Envision yourself as a shareholder who, in times of financial success, receives a dividend. Investing in established companies that distribute their earnings on a consistent basis is the basis of this tactic. Dividends are different from counting on the appreciation of one's capital. They offer reliable revenue that is unaffected by market fluctuations. There must be a good cause for Buffett's enthusiasm. Payouts can be made in the form of cash, checks, or further shares of stock. Your dividend payment will be proportional to the number of shares you own if a firm decides to distribute its profits to its shareholders. It's a win-win situation because the company can buy back shares and return cash to shareholders. If the money is being used productively, then it makes it logical to not provide dividends. According to Buffett, dividend-paying stocks are a good way to build wealth. Additional stock and revenue can be gained through the reinvestment of dividends. Buffett's long-term outlook is consistent with this. He's not interested in getting rich quickly. He has a reputation for appreciating substance over style. His words on how his firm selects its investments might be paraphrased as, "We choose investments like we're buying 100% of a business. Strong long-term economics, honest management, attractive price, and an industry we understand." Additionally, his strategy guarantees wealth regardless of market conditions. He favors dividend-growing businesses with ethical policies. Study up on dividend stocks before putting your money in. Invest in companies that have a track record of paying dividends, have consistent profitability, and have low debt levels. Buffett is known for investing in companies that have a distinct advantage in the market. Now, if you want to earn $2,470 each month, what is the magic formula? Hold tight as we reveal the plan that will make it happen. Before we get into the specifics though, please give this video a thumbs up and sign up for updates. By following our lead, you won't have to worry about missing any important pieces of this financial puzzle. Are you prepared to make a plan for your financial future? Let's get down to business and figure out how to win. Now, what exactly is the plan that will lead us to that coveted $2,470 monthly salary? Our overall strategy for getting where we need to go is as follows. Buffett rightly observes that diversification protects against inexperience. The best way to protect ourselves against market volatility is to invest in as many different things as possible. Nothing wrong with this approach. It's a good one, especially for folks who aren't familiar with business analysis. Owning a large number of companies, as Buffett proposes, perhaps 50 or 40, may be risky, but for those of us who know how to analyze and evaluate firms, this may be too much. Diversification proves to be our most reliable ally when it comes to dividend investments. By spreading our investments around rather than putting all of our eggs in one basket, we may increase our earnings significantly. Also, he highlighted that the first and most important rule of investing is simply not to lose money. Protecting our savings is a top priority. Buffett stresses the need for dividend portfolio diversification to lessen vulnerability. We reduce our exposure to any one economic cycle by spreading our investments over a wide range of industries and fields. Buffett's greatest successful bets have lasted for decades, demonstrating the value of keeping a steady course and avoiding the temptation to trade regularly. The full impact of compounding is only visible over very long periods of time. In the 1960s, his portfolio included familiar names like Disney. The sales were made when we had an urgent need for cash, but this hasn't been an issue for the previous 10 to 15 years. Finding stronger prospects was the driving force behind sales 40 years ago. The choice to sell our holdings was not made lightly, but it was motivated by our desire to acquire something of much greater worth. Ideas at the time outpaced funding. But now, we have a new problem. More money than ideas. As a result, transactions take place whenever the economic dynamics of a company are re-evaluated. When we have reassessed a company's long-term competitive advantage, that doesn't mean a calamitous period is imminent for the business. Companies like McDonald's and Disney still have our full faith in their bright futures. However, he assessed this situation by shifting to their competitive advantage. Choosing dividend equities that strike a good balance between current yield and dividend growth potential is also key. Despite our attraction to high yields, we believe that a company's capacity to sustainably increase dividends is a better indicator of its financial health and growth potential. Furthermore, Buffett suggests reinvesting dividends either back into the original stocks or into other attractive dividend-paying opportunities. By reinvesting our profits, we are able to grow our portfolio and increase our cash flow. What should you do now that you understand the basics of dividend investing, have diversified your portfolio, and are using Warren Buffett's time-tested approach to investing to automatically grow your income? Hold on tight because we'll be revealing it soon, but before that, please show your support by clicking the like and subscribe buttons before we begin. By doing so, you'll make sure you don't miss any of the helpful advice we provide as we proceed. Are you prepared to take your money management skills to the next level? Let's keep going. Dividends are the most efficient and quickest way to reach the goal of financial independence. But how do we get there? The key to dividend investing success is straightforward. Invest in exchange-traded funds. Dividends can be a fast and easy way to build wealth with ETFs. These funds benefit investors in two ways: through rising asset value and consistent dividend payments. Based on Buffett's advice, we construct a dividend-focused portfolio heavy on reliable firms known as dividend aristocrats, which have increased their dividend payments for 25 years or more in a row. Choose well-established, publicly traded blue-chip companies that have weathered economic storms in the past. These companies continue to provide stable dividends even while they face difficulties. As we've already discussed, the cheaper fees and better alignment with long-term goals of our passive investment strategy make it the clear winner. For inexperienced or time-crunched investors, dividend-focused exchange-traded funds (ETFs) provide instant diversification with dividend-paying equities across sectors. These funds use call options, which provide purchasers the opportunity to acquire stocks at a certain price within a specified time frame, giving them the chance to make additional money from the sale of equities or capital gains. Covered call exchange-traded funds (ETFs) such as XYLD, OILK, and EWZ stand out since their yields are significantly greater than those of regular dividend equities. Take XYLD's yield of 11.83% or the other two at 11.82% and 11.83% for example. These three investments all offer double-digit returns, helping us move closer to our goal of $2,470 each month. You can rest assured of a secure retirement income with this strategy. Also look into dividend reinvestment plans (DRIPs) to speed up your financial future by reinvesting your dividends at a discount. Patience and self-control are essential to making money from dividend investing. Adopt Buffett's investment strategy and focus on company fundamentals through ups and downs. Don't make hasty, emotional conclusions. The greater long-term gains we've seen by following our investment plan consistently and religiously. Frequently evaluate portfolio results, keep tabs on the well-being of invested companies, and adjust as necessary if underlying conditions deteriorate. Let's move forward and calculate the dividend income we can expect each month. It's a simple procedure. Dividend yield formula. The dividend yield can be calculated by dividing the dividend per share by the current stock price. Calculate our expenditures. Multiplying the amount of shares we own by their current market price yields our dividend portfolio's total worth. Estimated monthly gain. Our expected monthly income can be calculated by multiplying our dividend yield by the total amount of our investment. In the words of Warren Buffett, whom we at Wealth Wizards wholeheartedly agree with, never depend on a single income. Put money on establishing a backup supply. Buffett's dividend-paying plan is a tried-and-true method of building wealth and achieving financial freedom. You can build a lifelong income stream and generate wealth by investing in stable, dividend-paying firms and maintaining a long-term perspective. The key ingredients for success on this path are diversification, dividend reinvestment, and unflinching patience and discipline. Do your homework and keep close tabs on your portfolio's progress. While dividend investing may not make you rich overnight, it does have the potential to provide sizable and lasting benefits over the long term. Do you feel prepared to take charge of your own financial future? Learn about dividends with Wealth Wizards and take the first step toward a more secure financial future. To receive more helpful advice and practical suggestions in the future, please like and subscribe. Keep in mind that dividends have the potential to completely alter your financial landscape. Until next time, Wizards!